Hello and welcome. This is Kathleen Levito, and I will be your host for today's webinar on policy benefits. But first, some information on our company. AAFMAA is the longest-standing not-for-profit association that empowers military families with affordable financial solutions. We accomplish this by being the premier provider of affordable life insurance, expert investment management, customized residential mortgages, and exclusive survivor assistance services, all for the military community, not for profit. As a reminder, this presentation is educational. It is for general information and only. It is not specific investment, legal, or tax advice for any of you individually. Do not rely on this presentation alone to guide your life insurance decisions. For individual advice, please contact us directly. I am now happy to introduce today's presenters, Cliff Brown, Vice President of Life Insurance, and Sray Sang-im, Manager of Policy Services at AAFMAA. And I'll go ahead and turn the presentation over to them to begin.
Thanks, Kathleen. Sray and I really appreciate the opportunity to be here today. In this session, we are going to talk about some policy benefits that are typical in life insurance contracts. Often when a policy is sold, policy owners are aware of the main purpose of the policy, that being the death benefit. But they're often unaware of some of the other policy features that are commonly included in insurance contracts. So first, we're going to start with benefits typically found in term policies. Then we're going to switch to whole life. And then we're going to cover some common benefits that are found in both. So first, on term products, term policies are some of the most popular in the insurance industry for their convenience and low cost. The primary benefit is cheap premium for a high death benefit. The policy will pay a death benefit if the death of the insured occurs during the term period. However, there is no accumulation of any cash value in these policies. These policies are relatively simple, but can sometimes come with some extra perks. What are some of the additional benefits you have seen in a term policy, Saray?
The first one that comes to mind is a conversion option. Many term policies allow the policy owner to convert the term benefit to a whole life benefit, and often without underwriting. This allows the owner to continue the coverage beyond the term period. The advantage to the customer is that often they can complete this conversion without any additional underwriting. So it is quick and easy, making it convenient to the owner. For example, at AAFMAA, the owner can convert a portion or all of their level term 1 benefit to value-added whole life at any time. For a level term 2, they can convert for the first 5 years. This allowed all done without any additional medical underwriting, so it is very convenient for our members.
Good point, Saray. I've also seen term policies that convert to a different type of policy as well. A good example of that is our level term 1 that provides the option of converting to a 5-year renewable term. Some term policies are renewable and that they can continue their coverage on a renewable term basis for a higher premium than their base term. In our level term 2 plan, at the end of the policy term, the owner can renew on an annual basis, so it converts to a 1-year renewable term. Renewable policies are beneficial to the insured in that if a health event occurs that makes them uninsurable, they have a guaranteed way to continue the coverage. One thing that buyers should be aware of, though, is the cost. Conversion and renewable benefits fill a need of the insured who has health problems. However, they are almost always more expensive than if the insured can qualify for a new policy with underwriting. If the insured is healthy, it's probably best for them to go through underwriting to get the cheapest premium. What other benefits have you seen in term policies, Saray?
Well, some companies may include benefits for children or spouses. This may be inherent in the plan, or it could be an add-on benefit that you pay for each month. An example of this is at AAFMAA Level Term 1 policy includes a $10,000 child benefit for qualifying children up to age 23. This is done at no additional cost. We also have a family benefit rider that can be attached to any policy that provides coverage for spouse and children. The benefit of this type of coverage is it can be easy to add to the base policy.
I know there's some other benefits to consider for term that we want to address, such as beneficiaries, reinstatements, successor owners, And we're going to address these later as they apply to whole life as well. But I think this is a great time to switch to some often forgotten whole life policy benefits. A whole life policy is a permanent policy that provides lifetime coverage at a level premium rate that does not increase as the insured ages. Whole life pays a death benefit, but also has a cash savings component that can build up over time. What are some of the primary benefits you see in whole life policies, Saray?
Okay, so one of the biggest advantage of whole life policy is the cash value component of this product. The policy cash value is the portion of your policy that earns interest over time and may be available for you to withdraw or borrow against it. The rules of how you can access these funds vary by policy, so please be sure to check with your company to see the rules for your specific situation.
That's a great point, Saray. Most people access their cash value by taking a loan against the policy. When a loan is taken, there is a set interest rate that is charged that's often a point or two above the crediting rate of the policy. The downside of this approach is if you don't pay back the loan, the amount is deducted from the death benefit for your beneficiaries. What happens if you don't pay the interest on the loan, Saray?
That's a great question, Cliff. If the annual interest is not paid, then the interest amount will be capitalized into the loan principal, increasing the loan balance and further decreasing the death benefit for the survivor. We recommend you at least pay the interest every year so it does not capitalize and increase loan value. This is important because once the loan value exceeds the policy's cash value, the policy can lapse due to being overloaned.
Okay, so we encourage everyone to carefully consider loaning against your cash value to make sure it's right for you. Loaning against cash value has some big advantages. It can be quick, it can be at a competitive interest rate, and it's very flexible with paying back. These are all great things, but we do want to caution our customers to carefully track their loans. We recommend that you at least pay the interest every year so that does not get capitalized and increase the loan value. And this is really important because once a loan value exceeds the policy cash value, the policy can lapse due to being overloaned, as Saray just mentioned. What other ways can a customer access their cash value from their whole life policy? It's not limited by a term period, but you can pay the premiums up for a shorter period of time than your entire life.
We call it a partial surrender. This is where you can withdraw money outright from the cash value of your life insurance by surrendering a portion of your life insurance policy. When you surrender a portion of the policy, you get a portion of your cash value returned to you. Let's say your policy's benefit is $100,000 and you have $10,000 of cash value. If you were to partially surrender $25,000 or 1/4 of your policy, you may receive up to $2,500 or 1/4 of the cash value. It's not always as simple as that because the company has to make sure there is enough value to ensure the policy still performs to last your whole life.
Yes, agree. Partial surrenders are a good option to access some of the cash value. But like loans, we do caution our members to carefully consider this before they request it. Remember, once the part of the policy is partially surrendered, it cannot be reinstated if the insured felt they needed more insurance later. It's a great benefit, but we just want everyone to know all the facts. Saray, what if an owner of a whole life policy wants to reduce their future costs of the policy, but don't necessarily want a refund of cash value?
Great question, Cliff. Some whole life policies allow the owner to complete a reduced paid up. This option allows the policy owner to take the cash value of the policy to purchase a paid up policy, which will have the effect of reduction in death benefit, hence reduced paid up. This is a great option for the policy owner who no longer wish to pay whole life premiums to retain some of their death benefit and cash value.
So in summary, there are 3 great benefits that whole life policy owners should be aware of and potentially use instead of surrendering their policy. That's a loan, partial surrender, and reduced paid up. We have found that some of our members forget they have these benefits when they call to surrender a whole life policy that they've been paying for years, or because they want to access the cash value. Our team is trained to be able to surrender a policy, but first we will make sure that all of our policy owners know the benefits they have available to them. This is especially understandable when you consider the number of years that may have passed since a whole life policy has been in force. Often, when our members hear of these other options, they select one instead of surrendering their policy in its entirety. So I think that wraps up the main benefits we wanted to discuss on whole life policies. Now I know you want to discuss some benefits that are available on term and whole life policies. Where do you want to start, Saray?
Without a doubt, beneficiaries. This is the most important benefit of any policy, making sure the correct beneficiary is selected for your policy. There is rarely a problem when the policy is first taken out because the policy owner is thinking of the beneficiary when they took out the policy. My concern is after years have passed and family dynamic have changes. Sometimes beneficiaries should or must be updated.
What's an example of this?
Well, major life changes like a divorce. When a policy was taken out, the insured spouse was named as the primary beneficiary. There are some states that when a divorce occurs, the beneficiary is invalidated. So if the insured passed away, the former spouse would not get the benefit. It would be passed to the next beneficiary in line. In my experience, many of our members intended to leave the former spouse as a beneficiary because of the children involved, but they don't know they should complete a new beneficiary form and correctly label the relationship former spouse.
That's concerning.
Right? The other time someone should change or update their beneficiary is when the contingent or secondary beneficiary is no longer alive. If the insurer passes in this case and there is no living primary, the benefit would be payable to the estate, and that's something you want to avoid if possible.
Yeah, that's a great point. Life insurance is designed to pass to the survivors tax-free and outside of the estate, so it doesn't get held up by the settlement of the estate. If there's no living beneficiary and it's paid to the estate, it may take longer and be harder to distribute. Additionally, depending on the situation, having the benefit become part of the estate may subject the funds to taxes and/or estate fees based on the estate value. Best to keep your beneficiary up to date.
At AAFMAA, we include the beneficiary on every annual statement that is sent to the owner to remind them what their current beneficiary is. Like AAFMAA, most companies try to make it easy to keep a beneficiary up to date. Often you can request a form from a website or call the company customer service number to receive a form. We offer both at AAFMAA.
I agree with you, Saray. The beneficiary rights is such a critical benefit. Policy owners should provide as much detail as possible, including contact information to help the company contact survivors and pay the claim quickly if the insured is to pass. We also see some members name their children as beneficiaries. Be aware that a life insurance company can't pay benefits directly to children. We recommend that if you want a child under the age of 18 named as a beneficiary, arrangements should be made now on how the money will be managed through a trust or other legal provision. For AAFMAA members, AAFMAA's Wealth Management and Trust has lots of experience in assisting our members in this area. What else do you have for us, Saray?
Another important part is successor owner. This is so important for policy owner that owns a policy insuring someone else. A life insurance policy is like other asset that would be subject to probate at the time of the owner's death. If the owner and the insured are two different people and owner dies first, then without a successor owner, the policy could be cut up in probate. The solution is quite simple. Name a successor owner ASAP so that in the event of the owner's death prior to the insured, the ownership change automatically.
You're right, Saray, and it's very easy to do. It's a simple form that can be completed by the owner and provided to the life insurance company. By completing this form, it can save survivors so much time instead of having to work through the courts to get the ownership of a policy transferred. So hopefully we've covered some useful material today regarding policy benefits that people may not have known about. Life insurance policies often have more benefits than just the death benefit. We encourage everyone listening to think about their life insurance policies they have and be aware of all of the benefits. The best way to do this is review the policy periodically. I know it's not always fun, but it's usually easier to review than maybe your automobile policy or homeowner's insurance policy. Also, you could contact your company's customer service department and ask them to review your benefits with you over the phone. Be sure to ask if there are any additional benefits that the policy has besides the death benefit. Thanks, Saray, for taking the time to be here today, and thanks, Kathleen, for helping us put this webinar together.
And thank you to Cliff and Saray for your expertise in this area and for letting our members know about these important benefits that I'm sure many are missing out on. So we'll go ahead and break here for now, but please don't hesitate to reach out if you need any assistance now or in the future. And you can always visit AAFMAA.com for more information. And if you found this information useful, we encourage you to please share it with your friends and family. Our membership grows stronger every year because you introduce those in your military community to AAFMAA. Thank you again to everyone listening for joining us today. We look forward to our next opportunity to assist you. All right.